Hello everyone and welcome to today's live stream where we've just had durable goods and I'm just going to show you quickly if you are watching. Today's live link to notes is at the bottom, so you need to go and find that if you want to follow me. And basically I am just going to show you some new things, some new cool tricks that I've got to help us out during the day. So if I'm making some tips, I will put up some top tips banners there. I've got a short button to indicate that I'm short. I've got a long button to indicate that I'm long. Oh, hang on, short's at the bottom. Sit on hands, don't do anything. Chop, so warning, chop, chop, chop. I've got a breakout alert. And that's pretty much it. So hopefully that will help us get along a little bit better and for you guys to understand what's going on. Because I realize that there's long breaks in talking and there might be positions on, there might not be positions on. But it's important to follow the notes and important to follow some of these banners that I'll be putting up as well. So just to give you an idea about what's going on. All right, so we are only 10 minutes away from the market open where we will be trading live, and I've just did my little prep. And what will I be looking for? I am looking for the area around 12s to hold for a reversal. I want to see some strong buying, holding in that area for me to then look to take a outside in trade. I expect that to be an area of support, and for us to move back through the overnight range, which is kind of balanced at the moment. I mean, this is what's going to make it a bit more difficult, is the overnight inventory is balanced. You know, we've got quite a lot of volume done above the close and quite a volume done below the close. We are trading currently inside yesterday's range. We did overnight briefly break above the overnight highs, the prior day's highs, and we put in this very nasty, very flat, poor looking high here on the overnight session. So we've got some poor highs there where we might expect to see some stops running through. We've still got the real-time gap, the US session gap between, I think it's 54 and 71. So that might look to close, especially if this overnight overnight high triggers off some stops. So maybe a target at the prior day's gap, and then this VPOC up here. All right, so those are the kind of things I'm looking for the long side. So I'm looking to hold. Let me just quickly bring for longs to hold. For longs to hold in this, this area, the overnight low, which might probably get tested early on. Overnight low to hold, which coincides with this, this little ledge here on the volume profile, where we can see a lot of volume being done. So we're looking at 16s, I think. Looking 16s to hold. I think I put down 12s in my notes, but that's just because I saw it on a slightly different time frame. I think that's this ledge here. So 16s to 12s, I expect this ledge to hold. And if we don't manage to hold, then I'm looking for short below the prior week's settle and looking to take out yesterday's lows and, all the way down to 55s and then 75s, 55s, 30s to take out last Friday's lows potentially. That is a very unlikely scenario going into FOMC, so I'm going to sit on my hands a lot. And I'm probably going to try and do some streams in the meantime, because I'm not too keen on taking trades whilst we're in this balance. We're in big weekly balance. I'll just show it up. I'll just bring it up now. I'm just going over what I said in my debrief and plan for the day. But yeah, there we are. This is this week's profile. What are we doing? We're not going anywhere. We're not doing a very good job of going lower. We had a try yesterday, but we got held in this big distribution yesterday, down around 70s, which is an area that we already, we were prepared for a reversal there, which we said in our notes yesterday, and we had written down in our weekly notes. And then what we've done, we're just kind of filling in this cave from last week. We're just balancing, and so whilst we're in balance, I've got no conviction to take big trades. I'm looking for outside in, rotational. I expect chop. So hang on, where is it? I'm expecting more of this stuff. Nasty chop. So let me move that. It's not the best place, is it? Chop all over my face. Chop. How do you move this? Let's put it there. Is that better? If you can see that. So I'm expecting more chop. So I'm looking at 2A action, a bit like how price was behaving yesterday afternoon after we reversed. Yeah, overnight highs we've got set at 39.72, and the lows at sorry, why is this not showing up here? It's too small. Sorry, I'm calling out the wrong numbers here, aren't I? We've got the overnight highs at 39.69 and the lows at 13.5. So those are areas that I'm going to be making note, and I want to be looking out for trades in those areas. I'm looking for, if we do get up to the highs though, I'm expecting it to maybe push up a little bit higher, maybe close that gap that we left over from yesterday's open. But if we get lower to the lowest side, I'm expecting some more support, as we did find yesterday. All right. Okay, but yeah, sorry, I just contradicted myself. So if we get to the lower side, if we get below 12s, I'm expecting yesterday's lows to get tested and maybe a move lower. But I think this is all highly unlikely going into the Fed. All right. Okay.
We are just seeing some comments from US Special Envoy for Iran, Mali. Says the prospects for reviving the 2015 Iran nuclear deal are tenuous at best. Iran's nuclear advance since the US left the deal have left a breakout time as short as roughly a few weeks, according to Mali. The comment about demand outside of the 2015 deal appears to reference Iran seeking Revolutionary Guards removal from US terrorism units.
What's nice about having the
And so
volume profile
also
on your
hearing more from
dome
US
is that you can
Special
just see,
Envoy for
like,
Iran,
initially you
Mali,
don't have to
says
look
that
at the
if there
charts,
is
you've
no
got it all
deal,
in front
the
of you.
US
Okay,
is
you've
ready
got
to enforce and further tighten our
like this little
sanctions
distribution.
and
So
to
if you're looking to
respond
take a long
strongly
now,
to
you want to
any
be looking at
Iranian
maybe getting
escalation
long
in concert with
here,
Israel and
ideally.
others.
But it just gives you the structure, the microstructure to take trades on. Look again here, we've got like this, these lovely little forming distributions where you can take a little structured trade. With a little bit of an impulse higher, following an impulse lower. So yeah, no trade here for me. Not in the areas that I want to get involved in. Sorry, I don't know if anyone's been talking to me. What I was just saying is if you are trading using a dome, one of the nice things is that you don't have to look away to your chart. You've got your volume profiles right in front of you. So if you're looking to take a long, this is a valid area to get long. And why? Well, you've got this little low volume area here. You know that there's been some support. Well, actually, you want to probably get in ahead of that high volume area there. But what I'm trying to say is that if you've got volume profile on your dome, it is a really good quick reference to see quickly where you want to try and structure a trade and where your risk should be. So right now we had a little impulse lower, failed to break the overnight zipper. We are now trading higher. I am looking at the overnight VPOC, which is at 41, looking for that, and there's the previous close. That, looking for something there. Saw some big bubbles. Don't want to see this trade much higher. Okay, so I've taken an early short there. I saw these big bubbles of volume. Okay, I'm looking to scale this out. Okay. My stop's been moved to, I don't want to see this go above this high. I've covered my risk on this early trade, and I am now looking to take this trade lower. I don't want to see it coming back. Okay, Nasdaq is impulsing higher. I'm out that trade. Okay, I managed to get out of it just before it spiked, so I used my keyboard there to exit. So Wow, I think that's another example of my price feed being really weird. Anyway, we've retested the high and it's looking like it's so the previous close is now being tested. We're holding in that area. Okay, I might get back involved in this short and keep my stop in. That was the wrong idea, wasn't it? Yeah. Nope. Okay, my price feed's got issues again today. Okay, next area I'm looking at, we've broken above the overnight VWAP. I'm looking around. I'm looking for a quick trade. No, I shouldn't be. This is impulsing higher now. So I'm looking more for outside in trades given the fact, but seeing this impulse and the rejection on the impulse lower makes me think that we are seeing very strong price action high now. Delta's going higher too. Okay, so we're seeing this little volume area here. So okay, we're just holding at the highs here. We've got this little low volume distribution forming up here between 48 and 52s. But it just looks like we're failing a little bit here, so might be worth looking for a reversal here. Back down. This is a good area to get short. We're just almost testing yesterday's highs. No, not a good idea. Didn't see anything there. Seeing a lot of green on the tape here. Okay, good to note yesterday's highs at 54 and a half. That is the next area for me to take a trade.
Seeing some commentary from Saudi Aramco CEO says the oil market supply and demand are balanced. Says that the global oil market is running short of spare capacity and more investment is needed in long-term oil and gas projects.
Okay, should we break yesterday's highs? I'm expecting much choppier price action as we go and close the gap left over from yesterday's Globex.
Just seeing some comments here from Saudi Aramco CEO. And it's a reiteration of comments from last week, but it does note the global oil market is running short of spare capacity and further investment is required in the long-term oil and gas projects.
Okay. Okay, we've seen some really So you've seen some really impulsive buying on the open, and we're holding at these highs. So I am now starting to think that maybe if this area here holds, we are going to look to target a closing of that gap. Seen a lot of selling down here in the 45s, and that was rejected higher. Okay, going to take this long trade here, just hoping this holds. With a quick scale out at the highs. Okay, this is not looking good. But again, that looks like it got defended. Do you see that? That's a good sign here. Bit of a scalpy trade almost, but I know if those highs break, we're going to get like a very choppy price action up into the 74s. And I'm willing to take that risk, seeing what I'm seeing. We're seeing this hold in these high areas. I've got a scale out here, which will get rid of most of my risk, but I need to get these lows need to hold, and it doesn't look like they are going to. No. Okay. Not great. Not great. Okay, this looks like failure back down now. Okay, looking for a hold maybe at the prior close. Okay, looking for these prior closes to defend. I'm going to exit this trade quickly if I see otherwise. At the moment, I'm... Once you get a trade on, you just got to let it be. You got to let it do its thing. I think on long 42s, a good place for a scale is maybe just the lower end of this distribution here, 47s. Given the fact the way that we reject this, it might be worth even the way we rejected those that prior close. It might be worth just waiting for a scale at the other side of this distribution on the flush up. I'll be a little bit flexible with this one. Okay, I'm going to take this off just because I'm not seeing it push through. I've got my stop at break even now. I don't want to see the open, and I'm expecting a flush now through these highs, a little impulse high. My next target will be 54s. Okay, should be filled. Okay, I've just got my runners left on now, and I will just leave those. I've got my stop at the lows, and I'm going to walk away. Okay, I'm going to put my long hat on and sit on hand. This might still fail, but I'm hoping for a push now all the way to the overnight highs and test those. Okay.
According to Kyoto here, Japan Mall is resuming foreign tourist entry in June. The US Trade General says that the US looks to boost market access through non-tariff means.
Well, I got stopped out there at the lows, a little flush lower. I still think longs are trying to hold this. Well, I got stopped out there at the lows, a little flush lower. We're just hovering around the Nasdaq close as well, so that to watch too. Might be worth taking another stab at this. Let's just put below the low. Okay, so I'm looking to get a little flush back into this little area here. Maybe I'll try it. Okay, so I'm looking to get a little flush back into this little area here. Maybe I'll try it. Okay, I'm long again, and I'm going to look to hold this one this time. Break out this little area here. I'm going to look to hold this one this time. Break out this little area here. Nasdaq's trying hard to hold above the prior close. Not really seeing. Nasdaq's trying hard to hold above the prior close. Not really seeing what I want to see. Come on, come on. Okay, that's what I want to see. Come on, come on. Okay, I'm going to scale out just to. Okay, so I've scaled out most of my risk. And I'm going to look to hold this now. Just grindy. Not what I want to see. Alright, I might actually exit this before stop on scratch. Scratch on stop. Sorry. Sorry, I'm concentrating on this. Really struggling to move away from the prior close. Okay, that's good. But you can see where we're finding little pockets of resistance. That's good. I might just scale out one more.
Just of note for the energy watchers, Ukraine's state gas operators says Gazprom has built terminal capacity.
Okay, I've covered all my risk now.
1 million cubic meters from May 26th.
I'm going to leave the rest.
44.15 BCM in May 26th.
I want to see us hold above this little POC. point of control. And then just hold above this little pop, point of control. And then this little ledge needs to hold. I don't want to see it flush lower. If it does, that's not good. This little ledge needs to hold. I don't want to see it flush lower. If it does, that's not good. I will exit for a scratch, I think. This little area needs to hold. This little ledge on the profile. What I want to see now is like a flush through the 51s up to the 56s. Given the way the price action is, it might chop back down to 52s. Hopefully I get filled on my little one lot here. I'm trying to be patient with this. Okay.
So just as an early reminder, we do have the US EIA crude oil inventories data due at 10:30 a.m. Eastern time. So if you would like some prep and to trade this data with us, we do have a live video linked on our Financial Juice calendar. If you would like to tune into that, again, the link's just in the calendar there. Trade EIA inventories with us. And starting at 10 a.m. Eastern time.
Okay, this is not looking too good. Really seeing it struggle, the Nasdaq above the...
US Treasury Department says it is designating an oil smuggling network generating hundreds of millions of dollars for Quds Force and Hezbollah.
Okay, held at the VWAP.
Just a note for Boeing to BA. It does start new A-10 wing deliveries to the US Air Force. Of note for Boeing BA.
Okay. What's interesting here is just how we've held on the mid and the VWAP here. This is you know, if you're not already long, should be looking to take a long here is not a bad place. So it's being defended at the moment, but yeah, I really want to see Nasdaq hold above the 800s and for this to get above 50 again, but it's struggling. So already we're seeing very, very choppy price action, and you know, this is something that, you know, we get in these 7-8 point rotations. This is not a good sign for continuation, really. I'm willing to hold the trade just because I have to stick to my rules, which is once your trade's on, you want to try and make sure you're not fiddling too much with it. I've scaled off most of my risk. But yeah, at the moment that VWAP is holding, that mid's holding. Need to see it push through, back through the 50s. Okay, just making you aware that this is very, very choppy up here, not the kind of price action you want to see for continuation. And we kind of expected chop, but we're in a trade and we're going to hold it and see it to fruition. We've scared out half the position. We've got our risk covered. It's kind of a free bet to nothing now. So we want to see it try and push above 50s, hold, and then break up to take the highs that we've created at 52s, 51 3/4. But at the moment it's really, really struggling. But Nasdaq is now holding above the 800s, but it's coming back down again. Chop, chop, chop. So I'm going to put my chop sign. This is where you don't want to be chasing trades. You don't want to be buying these highs, looking for the breakout of this little consolidation area. You don't want to be selling these lows because all we're doing is just chopping, chopping, chopping. This trade has a low probability of success given this price action that we're seeing, but if we start seeing this consolidate and holding here, that's good. See, we haven't seen a rotation high. That's good. Here we go. Come on, 50s. Get up there. Get above those 50s. Come on. Come on. Get above. Get above. Get above. Get above. Come on. Go, 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 go. And Nasdaq is slowly breaking up. 1820. 118.20. 52s. Here we go. Come on, let's get my scale out. Oh, it's gone. Where is my scale?
So potential calls buyers ready to make lower bids amidst market downturn and other factors, according to sources via Reuters.
Really unconvincing. Come on.
So we are just seeing from a major newswire poll here that over 75% of analysts, so 79 out of 104, said that the current stock market downturn would last at least another 3 months.
And just further here for Coles, ticker KSS. So the bidders, which do include PE firm Sycamore Partners, brand holding firm Franchise Group, and JCP Investors, Simon Property Group, SPG, alongside Brookfield Asset Management. So they do plan to lower their offer by at least 10 to 15%, according to sources. So just bear in mind, Coles shares are currently halted for volatility. And just taking a quick look at the equity space, so it is very choppy at the moment. So the early gains seen at the cash open just pulling back a touch, but nonetheless the contracts are still relatively flat, so that will be for the ES and NQ. Meanwhile, the RTY is
Okay, that mid now is now broken. Oh, we're just holding at it. There we go, stopped. Okay. Okay, I'm giving up now on the idea of longs. This is what happens when you're trading inside inside balance. Little signs that I maybe missed and maybe got overly excited there. So basically,
So
what we
Peach
did is
says
we
that the US
tested
is likely to
yesterday's
take
high.
months on the China tariff 4-year review, and it's possible that the tariff exclusion process is to occur during the review.
Yeah, just carrying on. We tested yesterday's high. We broke it. We broke it to the upside by a couple of ticks. 56 is the high, and then we fell back down. So once we fail that, once that auction fails, you want to be thinking that, well, if this doesn't hold convincingly near those highs, and at the moment we haven't because we've rotated back, you know, a good 15 points. You want to be thinking that, you know, this might not be on this this continuation of the price action we've seen from the open. But at the moment, yeah, it's very choppy. It's interesting. I stopped out twice at this 38 level. That's a bit painful. If this 38 level breaks, I might be looking to take a short back to the other side. Look, take out the overnight lows. I'm not ready to take shorts at the moment because we're just still hovering up above the prior close. But we rejected yesterday's highs as well. Unclear. Sit on hands.
Peach says the US must be realistic about what to expect from China.
Doesn't look like longs are willing to give up. So far they've defended well. What question is when will they give up? And if they do give up, where do we go? So below 39s, I'm expecting a nice flush. But very, very tricky. So far they've defended. You can see it's a very clear line in the sand here at 38 and a quarter, where I've stopped out twice on my residuals. Okay, just managed to get the trade on again, just above. Going to scale most of this out quickly. Looking to cover most of my risk, and I've got my stop. Just don't want to see it come back down to that. Where is it? Where's the low? 30, 38 and a half. So that's where my stop should be. I'll give an extra quarter of a tick, 38. But yeah, managed to get the trade back on again now. So yeah, just seeing a bit of, you know, really strong. Yeah, really strong holding here by the by longs, but not very convincing. You just seen it push back up to the 50s and then reject again. Come on, eventually these guys have got to give up. I won't be looking to take this far below if I see any dramatic turn in price action. Okay, time to put some targets in. Really want this to break these 53s. Come on. Come on. Filled. Okay, right. Now we really don't care. We've taken 10 points on that little clip there. We've got a little cushion now. So now it's just a case of watching and observing the market and how it progresses. Let's just have a look where we are on the bigger picture. Again, we're trading up near the Friday's highs, but we've got this nice double top here. That looks good. That looks good for, that's convincing. The fact we've come back up here, that's good. But it's been really, really difficult. Really difficult. Quite a big IB. And what I'm targeting is this push up higher through the overnight high. We're in this little cave. I'm just going to put that way now.
So just a reminder for you, at 10:30 a.m. Eastern Time, we do have the weekly US EIA inventories data. US EIA crude oil inventories forecast at -2.129 million, previous at -3.394 million. Range here being highest estimated forecast at 2.5 million, lowest estimated forecast at -1.2 million. US EIA distillate inventories forecast 1 million, previous 1.235 million. US EIA gasoline inventories forecast -1.641 million, previous -4.779 million. As a reminder for you, yesterday's US API crude oil stock change data did come out at 0.567 million, compared to the forecast of -0.69 million. Gasoline at -4.233 million, and distillate at -0.949 million.
Okay, just get up another one. I've just got a little residual now, and that one I'll try to leave for as long as possible. Just get out the last clip around the 60s area. It's the overnight VPOC, and I expect some kind of resistance there. Okay, so we hopefully try and take out those overnight highs. This is not the kind of trade where I had the conviction to take and add to the trade and put more and more on. I'm aware of the troppy price action. Although it does look like yesterday we might be cleaning it up a little bit. We might start to clean it up a little bit with the price action above 72. So above 72, I'm expecting 84s to get taken out. The
Take a look at the crypto fear and greed index. It is 11 out of 100, indicating extreme fear.
Yeah, don't forget we've got oil inventories coming out in 15-20 minutes. Okay.
Fear and greed index now 13 out of 100, indicating extreme fear.
Okay, just having a look where we are on the weekly profile. Look, we're going to find some resistance here. We are bang on the point of control. So, you know, if we get above this, it might be a good idea to start looking for, you know, if you're convinced for whatever reason that we're going to start whacking out of, you know, out of balance, weekly balance, in which case we need to break the highs at, what are they? 39.80, I think. Is that right? Yeah, 39.80. So getting, you know, looking for a pullback at VPOC is not a bad idea. We've got this little these little distributions forming now. But just to just make you aware
So
of why
in
we're
5
seeing
minutes
some
time,
kind
we
of
do have the
resistance
US
here.
EIA crude oil inventories. Forecast
why
minus
also
2
I
spot
expect it to be very,
129
very
million.
difficult and
Previous
choppy,
minus 3 spot
in this,
394 million.
area.
The range being highest estimated forecast 2 spot 5 million. Lowest estimated forecast being minus 1 spot 2 million.
big
US
magnet we're
EIA
looking at
distillate inventories
is this
forecast
area
1
here.
million. Previous 1 spot 235
40-50.
million. US EIA gasoline inventories
profile's
forecast
quite clear
minus
there.
1 spot 641
So
million.
if we break and
Previous
hold
minus
above
4
these little
spot
edges here,
779 million. As a reminder for you, yesterday's US API crude oil stock
target,
exchange
but,
did come in at a
it
build
coincides
of
as
0
well
spot
with
567 million.
the prior week's high volume nodes here. So yeah, just be aware of that. But I'm not, not very confident that's happening now. But it's starting to feel like a horrible choppy trend up. Also, it being a choppy trend up, you still want to have some kind of, I'm 20 points on side on my residual, but I don't want to see that come all the way back to a scratch. So I want to try and make sure that I've got a sensible area where I want to get out of that trade, regardless. Okay, I want to be monitoring this for continuation, but it's horrible and it's tiring and it's not very convincing to be holding positions in chop zones.
US's Mali says the US will submit any new Iran nuclear deal for congressional review if it can be revived.
So the high time frame targets here are 40, 15. If we can really get going, this could break those break those weekly highs, and we're gonna get there, I think. But we're still far away.
1 minute to go now until we get the US EIA data. I will be leading with the US EIA crude oil inventories first.
Inventories coming up.
10 seconds. minus 1.019 million, minus 1.019 million. That's a build on the forecast of minus 2.129 million. US EIA gasoline inventories minus 0.482 million, minus 0.482 million. That's a build on the forecast of minus 1.641 million. US EIA distillate inventories 1.657 million, 1.657 million. That is a build on the forecast of 1.0 million. Just taking a look at the WTI after that release there, we're not seeing too much movement. So Blinken says the US is to enforce sanctions on Iran's illicit oil trade.
News: Blinken's going to enforce sanctions on Iran. Really messy oil inventories just now. We had builds pretty much in. Well, sorry, not builds. We had slightly less of a draw than expected in most. Let me just check the numbers. Yeah, with a build in distillates, we had a slightly less smaller draw in crude, but we just whipped up and down in a very violent whippy price action. Very, very dangerous to trade that at the moment. Yeah, if you're trading oil, yeah.
And now just taking a look at the markets, we are seeing crude crude futures slightly edged down after the EIA data.
Okay, so just so what are we expecting here? So we could go either way. We're chopping up, but we know that we have an average true range of, you know, at least 70-80 ticks at the moment.
And the US EIA oil inventories full report for this week is now available on the top of the
40
financial
ticks.
feed if you do want to have a
So
read.
another 40 ticks from where we are now takes me up to where my, you know, high time frame target of 40.15 is. So it's not impossible, it's hopeful, but yeah, all you can do is hope. You've got your position on, and once you've got it, you're going to try and keep running it for as long as possible, right? So that's what we're doing.
So US crude stocks in SPR last week fell to its lowest since September 1987, according to the EIA.
Price action's tidying up a little bit. We are seeing this, you know, hold higher, and slowly eke its way higher. It's looking like a trend, a messy trend at first, but these trends, the last couple of days, yesterday, if you look at the open, we had this messy open where we tried to hold, and then eventually we did break and made, you know, the price action cleaned up a little bit. So we're just watching this now cleanly move up to my last target, but I'm thinking I'm going to hold it. See what happens. I see no reason for me to get out of 74s, which was my target. Now just stopping through the overnight high. If it starts breaking back through the overnight high, that won't give me much confidence, and I'll maybe look to, you know, take the trade off. But at the moment we've broken through the overnight high and we are moving nicely. If you can hear that in the background, that's my tick strike. I've really struggled the last few weeks. Well, last week. The last week I didn't have it on, mainly because I was starting this stream and I didn't want that thing going off in the background. But just to educate you, I find it quite useful. It just keeps me in a trade. It helps me get into a trade when I'm looking at footprint, and then I'm looking for the trigger, confirmation audially from tick strike. So it's a pretty good tool. I really enjoy using it, but the reason I stopped was because I was just doing this live stream and I didn't want you guys to be listening to that funny noise in the background. It does have its downfalls. It can sort of mislead you when we are in chop, but yeah, if you know how to use it when we're on, when we're in a strongly trending market, it's a good tool. In case you're wondering what it is and where to get it, I'll put a link in my notes for the day, and I'm just going to find. I don't know if you're listening today, but yeah, it's a product from Financial Juice. If you click on Tick Strike, click. There it is. So you got a 7-day free trial. There's also a free version, but the paid for version is a little bit more exciting, bit more things to it. But on the free version, you can access it again from the Financial Juice website, which is it's just a resource that I've used for years and years and years. The guys running this are top notch, and given the fact that there is a delay on this, it's incredible that many times they actually squawk things a lot quicker than some of the other news services. So even with a 10-second delay, these guys are sometimes in line, if not quicker than others. I guess they've got their eye on the ball. So yeah, check out Financial Juice if you get a chance. And Tick Strike is the tool that you're listening to in the background, going tick 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 tick. So I'll explain what it does. Basically, as volume comes into the market, the more volume that comes in, the tone will change. Whether it's buying or selling, that changes as well, the tone. So I'll just quickly show you on a footprint how it works, and let's just get footprint up as we're sitting here doing nothing, watching our positions run higher. Now it's not really going to be very busy right now, Tick Strike that is. It won't be making too many noises as we speak, because we're just trending higher. You can hear it in the background there, just slightly. So you see these big balls of volume that I've got highlighted here, and I've got my ticker here as well. Well, those sounds kind of coincide with Tick Strike. So when there is a large buy order, you will hear a particular sound. When there is a large sell order, you'll hear a particular sound. If there's a series of buys or sell orders, you'll hear the Tick Strike, the ticker on strict Tick Strike really speed up, so you can really hear. Basically it's an audio ticker, so it just gives you that visual confirmation of things. So we're still marching up to my target. So my targets are all these lines drawn up here. They are from market generator information. I don't actually do this. My friend FT71 does it all for me. And if you join his community, they provide these tools where a lot of the major levels that they're, the head traders they're looking at are provided for you. And as you can see, they're pretty solid. We've got a lot of support and resistance on these levels. I think where I stopped out earlier today at 38 a couple of times. Where's 38? Yeah, it was a stalk zone. So he calls them stalk zones. So basically you're stalking a trade and you want to get involved in these areas. And as you can see, look, I stopped out there once, twice. I wasn't following Morrow's advice. So
Northern Islands, Islands Martin here, Islands PM Martin says the Northern Island protocol can be resolved.
Automatically put into your Sierra chart, Ninja Trader. I can't remember, Motive Wave is another one, and also Edge Clear's own platform. And it just helps you to sort of lessen the load on your thought process, because a lot of the levels that are important are on there, and they are clearly identified. You can see here, so for example, if we've got the last prior week's lows, highs, it's already identified as that on your charts, and this just gets automatically updated every day, and sometimes in real time. So yeah, it's a good little tool. It's certainly helped me to sort of ease the workload and the thinking process that I need when I'm trading. That's where we are right now. We need this little area to hold. You're seeing these. This is quite a big rotation now. That's maybe. I did say that if we don't hold, I am going to look to get out of the trade around here. I'm gonna give it a little bit more space.
Just to make you aware, Putin is currently speaking during a televised meeting with officials. We will keep an eye out for any important headlines here.
A little flush down to 68 and it bounced back up. I need it to bounce back up, otherwise I'm going to exit this trade. Okay, I'm out. Okay, I've given up 10 points there. I might be wrong, but that is the biggest rotation back I've seen. We haven't seen a big rotation back like that, so that's changed for me. That's something that I don't want to be seeing. And also we're seeing it hold down these lows here. Initially it was a flush. It looked like a possibility for it to bounce back up at this stalk zone. Now we're seeing it hold down at these lows. It's not looking to me as if it's going to go any higher for now. I might look to get back in again, but right now I'm glad I'm out, and it looks like it's anyway, I'm not going to pick the highs, I'm not going to pick the lows. I'm just looking to take the most I can out of a trade. And whilst this trade was on, let me just get my time-based chart. Yeah, we had this little chop zone from the open. Then we started cleaning up the price action above the 50s. And then we started
The US is Iran, envoy Mali says if the United States doesn't get back into the Iran nuclear deal, you will see tightened sanctions of enforcement.
Okay, just seeing this hold actually. Looks like a bit like a reversal pattern here, just below the stalk zone. So I've just put the trade back on again. It's a completely separate trade, and I'm looking for those lows to hold. And if it doesn't, that's it. That's my last go. Where is the low? I don't want to. 64.5. So I'm gonna put my stop at 64.75. Give it a bit of space. Okay, just to see if we can continue higher. All right, maybe I got duped out, but at the moment we're seeing this push down lower, and we're seeing delta reverse. we're seeing delta reverse. So I put the trade back on, seeing it reversal. So maybe I was a bit too quick to jump the gun. I'll look to scale out my one lot quickly near the highs. That'll make me feel a bit better. But I think I got out at 68 and I've just got back in again at 68. So I've just put the trade back on again. I even added to it, seeing that this looked like a bit of a reversal pattern. And I want to see at least 66s hold. Otherwise, I'm going to start getting worried. But I've got my stop in at 64s, I think, just below 64s.
So UK's PM Johnson, currently speaking in a televised press conference here, says that we are going to see pressures on household finances for a while to come, and says that we will continue to respond to those pressures.
So be it, that's fine. It's, yeah, the fact is it's not really moving away like I wanted it to. Okay, not good. Come on.
UK's PM Johnson says the government is going to do everything it can to help people with the cost of living pressures.
More or less echoing what we heard from the envoy Mali a bit earlier. If you do want to recap on those comments, we have a couple of moments to score. If you want to recap on them, have a look at the news.
Okay, 66 really needs to hold, otherwise I'm in trouble. And here comes trouble. Okay, I'm out of this trade. When I am out of this trade, I'm done for the day. As in, I'm not going to be taking any trades until FOMC. Okay, I'm done. All right, done. All right, gave back a little bit of money there, no worries. It might still hold these 62s. It's a good area to sort of expect some kind of support. I'll tell you why in a second. Why are we expecting some support there? Where is my time-based chart? So we're just entering this little low volume here now. So if there is any strength in this this rally high, you'd expect buyers to be looking to buy in this area here, but it's not really happening. We're just seeing this reverse trend back down again now. Okay, anyway, I'm pretty much done now. It might actually even be worth thinking about taking shorts, because we're trading balance, right? We're trading the outside of balance and the inside of balance. So this looks like we are just trading one side of the weekly balance to another at the moment. Okay. Little areas to maybe just take a note of are the VWAP. But yeah, I wouldn't be too keen to be taking trades around there at the moment. We've got the VPOC at 50. We've got the VWAP at 49. So there's a couple of things down there. 49 is VWAP. We've got VPOC at 50. So if it does flush down, I'm willing to take a trade. But if we're going to grind down there, I'm not so keen. Okay, it's got to be a flush and a taper. And the taper meaning that selling strength sort of tapers off into that area there. Okay. In fact, a decent short idea is looking at the 68s area. I might actually take this trade on. So look at your profiles now. So you've got profiles. You've got a really big selling tail, right? So if you, what you want to do, you want to try and make sure that this you're looking at this for a short now, and you're expecting balance trade one side of balance to the other. So if you're looking for potential short up here, which is a perfectly valid idea, I think, because we are in weekly balance, and we're only just about broken briefly above the overnight high, which looked like stops to me. So now we're trading back inside. That selling tail you can see at the top, you want to see that hold. You don't want to see it get eked into 20 degrees. So we've got a little upper distribution now around about here, 70s. You see this little where the line is? That's the value area high. It might be worth taking a trade, a stab at a short just on this little area here, just below it perhaps. I'm going to take that trade actually, especially if I start seeing delta reversing. So I'm watching carefully. I'm going to get my footprint up. And where is it that I'm looking to get short? Just on the top of this area here. Somewhere around here, the 68s. We've seen a 20 tick rotation from the highs now, so almost 20 ticks. 20 points, sorry, not ticks. That should give you an indication that maybe this trend has come to an end. Okay, didn't quite get to where I wanted it to go, but maybe it's still got some legs. So what I'm saying is, again, just to go back to the IB and the spike just above the IB, is that yes, we formed an IB, we spiked above it, that was the overnights all stopping out, but we didn't spend very much time above the IB. We haven't managed to hold on to the IB, we're falling back inside. So below the IB, there's a possibility for a good short here, I think, just like yesterday, where we broke the IB to the downside by a few ticks, and then we held on inside, and then we ground all the way up. So that's what my thinking is. So we have not spent we've got left a nice selling tail up there.
So the UK Finance Ministry is to make a statement to Parliament on Thursday, according to ITV Deputy Political Editor, citing parliamentary whips.
Quick reminder as to where we are on the profile. This is the weekly profile, and this is the idea, the trade idea. Look, 70s are the value area high of the weekly profile, and we are seeing some, strong resistance there, and we have done, hence this, very flat tapered top. Now, it's worth maybe having a stab at that one, because we only just briefly broke above it. Yeah, it's only just come to my realization, and I was patting myself on the back for getting long, but it looks like this trade might move away from me. But if I see a quick spike up there, I'm in. I'm convinced now this is a good trade. So I'm going to look to take the trade from the value area high area, 68.70s, and then look to trade it back to mid. which is in the 50s. So 20 ticks. If I can put, you know, structure the trade with a couple of ticks risk, that sounds like good risk reward to me. Okay. So in this case, we'd see a nice little flush through these highs into this area here where we fail. Here we go. I'm putting my offer in now. No, wrong one. Right, in. I'm willing to pull this. If I don't see what I want to see, I'm going to pull this order. But I've got my tick strike ready too. I'm looking at my profiles and my micro profiles, and I'm wanting to see a nice taper into those 68s, 69s area. There's a stalk zone there as well. Might bring this in a bit. And what we're doing is trading this little micro balance, this little profile here.
Fitch Ratings assigns OPEC funds proposed global medium-term notes.
Okay, it didn't quite get to where I wanted to see, but what I wanted to see is basically we've got this little balancing area here on the footprint, which is just basically a mini micro profile. We've got this balance area, trading balance, and what I'm trying to do is just see it poke above this little area of balance, and then move back in. So a good trade would be hits the 68, 69s, and then falls back in, and then you get short 66.5, and you've got your highs at 68, 68.5, wherever it is, as a stop. So that is the trade. So I'm just putting this as a marker to show you where it is on the footprint. It's not coming up on the chart, but on my dome you can see where I'm looking to get short. So what I want to see is that area there breached briefly, and then we fall back inside. Okay, that is a plus setup for me. I want to get a clip on, at least a big clip. That's the kind of tape I'm looking for. Now there's my high. 69 is the area I was looking at. I want to see it start falling back, and I want to get short that. Okay, in. Very tight risk on this trade. That was my taper. Where is it? 69.5s? I'll put it at 70s. Okay. This should move back. If we can break back low 67s, that's going to be a nice trade. That's the flush I was looking for. Come on. I want to be taking off my residual, at least on the other side of this balance. 61s area, 62s. I've got it at 62s. That's my scale. This is looking good so far. This is looking good. You've got this quick spike up. Got to exactly where I wanted to see it. This is lovely tapering, and I've got to have my stop just above it at 70. Now I'm just going to watch this trade, and hopefully it works out. But each trade is unique. It's a discrete event, complete, the probability of it working out is 50-50 at this point. I need the trading gods to You're seeing a lot of selling in this area now, but it's managing to hold. But yeah, I'm going to stick to my guns. Let's see what happens. All right. Short.
So the Russian National Settlement Depository, when asked about early coupon payments made on the Eurobonds due in 2026 and 2036, says the payments are to be made in foreign currency on May 27th. Also says that we received foreign currency from the issuer to make such payments, and that payments on the 2026
just got out my scale. I got my
Eurobonds
stop.
and 2036
I'm not actually going
Eurobonds
to
will be
leave
made
my
again
stop
on
there.
May
I'm going to put it back
27th.
to where it was. You know, it's really important sometimes not to mess around with stop. My stop just got moved to break even. I've got my stop on. I've got my scale out, which is exactly where I wanted it, which is the other side of the balance area. So I've got a little bit of my risk off. If I want to be even more cautious, I can get another one lot. Maybe I should. Maybe I should have got out of more than that. But right now, this is a low risk trade for me, especially if I to get another lot off. But it's looking likely that it's going to just chop around here a bit more. We've got my flush. That's what I'm looking for. That hopefully is going to be a local high. I'll explain why I got into this trade again in a minute. I'll go through the profile setup. Got out of half the position. I took another one lot off down at the bottom of that, so now I really have no risk. But what I'm going to do is I'm just going to try and trade all the way to the other side of balance now, or mid area of balance. My target's going to be the VWAP area around the 50s, and yeah, trades in now. If it starts moving a bit more away from, if it breaks below this little zipper here, we take out those 58s. My target's going to be somewhere in the 50s. Mid 54 seems valid. It's going to be difficult. This is going to be a difficult trade, guys. It's going to be choppy, but at the moment it's a bet to nothing as most of my risk is off. And I've already made more than my stop, so let me just put that in properly. I'll put my targets in just in case. I expect that this area is going to be difficult, but once we get over this hump here on the profile, I expect to have a little run down to this 50 VWAP area. So I'll put my just ahead, just below, and then I'll probably try to look to leave some kind of a runner on, but I'll put it in anyway just in case we get a spike. Can you hear that tick strike? There you go. Do you see how it speeds up there? As we just flush through below that zipper. That's what we want to see. Oh, just realised that this. So, I'm gonna put that in the debrief actually, just for people to follow. Print screen.
At 11:15 a.m. Eastern Time, we are expecting comments from Italy's PM Draghi and Bank of England's Tenreiro, both due to speak at an event in Milan.
Yeah, I put this trade in the notes as well, just to explain. Remember, all these notes and my debrief and plans for the day are available on the link at the bottom of my YouTube channel. Okay.
So just a reminder, in 5 minutes' time, we are expecting comments from Italy's PM Draghi and Bank of England's Tenere, speaking at an event in Milan. So US's Iran envoy Mali says there is no military solution to the Iran nuclear issue, and it would set back the Iranian nuclear program, but not resolve the issue. So US's Iran envoy Mali says there is Mali adds that the only real solution to the Iran nuclear issue is diplomatic.
Okay, some signs that this trade's not working is the fact that we're forming this 3 TPO ledge, 2 TPO ledge at the top of the value area high. Now, that means that we keep coming back to this area, which means it's likely to maybe break. This stops just above 68. So should 68s trade, I'm most likely going to have my stop taken out. So I'm actually going to move my stop to just above my entry point. So knowing that there's probably stops up there, I don't want to get a flush.
We will shortly be receiving comments from Italy's Prime Minister Draghi and Bank of England's Tenere. No indication of whether text or Q&A is expected from either of them.
But the reason I'm doing it is just because we just keep coming back up here, keep coming back up here, keep coming back up here. Really, I should just keep it at 70, but seeing the fact that we just keep coming up and testing. Well, if we've been testing 67s, then we should be testing 68s. So hopefully, someone's going to hold this below. I'll give it a tick, a point. Where is it? What's the prior high? 16. I feel silly now just adjusting it for the whole sake of a point, but it makes sense to me to adjust it. I usually adjust my stops to break even once we go 10 ticks 4 anyway. So it's already been 10 ticks. It's been down to 55. So I'm actually not breaking any of my rules here. So I'm actually going to just realign myself with my rules. stops adjusted to break even. For the very reason I just gave, not because I'm worried.
Comments
just
coming
because
from Iran here
I'm
did
seeing
say
it
that Greek
continuously
authorities did seize an Iranian vessel carrying oil, and Greece coordinated with the US to seize the oil cargo from the ship. This is coming from Iran's Ports and Maritime Organization, commenting in a statement there.
Amazingly enough, I just stopped out to the tick, so and it pushes back, but we just see like little micro higher highs, higher lows, and yeah, that might have not been the best decision. Should have kept my stop, but I was just trading what I was seeing. When you are trading chop, it's really hard to hold conviction because the trade just keeps coming back at you, Okay, that's really, really painful to stop out literally at the very high of that push higher. I think I stopped out to the tick. Yeah, 67 3/4. That was me stopping out there, and it's come all the way back down again. Okay, well, that's trading, guys. Can't do anything about it. That's how it is.
So US's Iran envoy Mali says the odds of a successful negotiation to revive the Iran nuclear deal are lower than the odds of failure.
Something that's going on at the moment, or that we're seeing in European equities at the minute, and this is a grinding trend, or what I call a grinding trend day. Now, these are quite tough days to trade typically, whereby you end up with a day that drifts on higher, which keeps enticing people to trade, but never really gives you any kind of confirmation or move away. And that becomes a very difficult one to trade, because you get in, so say you're moving up, you buy it, excuse me, and you never get really paid on it. meaning that then you sit through long periods of the market just chopping around you. You then have to maintain a great deal of patience, but also with doubt on how much further this is really going to go. So what I've got up at the moment is a few different examples of how they're created and how this can then help you trade them. So what we've got here is something that is not actually today, and this is where you get a grinding trend after a very strong initial move. So what you had on this day here is this very impulsive move higher, creates a small flag, and then another impulse higher. So this is what you would suggest is a breakout of positioning. Anyone short in this range gets forced out and you get this rush up on the break of trend. This then, from a profile point of view, creates this very P-shaped profile, but this is created by a grind higher. The way to be looking at these type of moves is pullbacks towards low volume, and this would have helped you out all the way up the move anyway. That after this first surge higher, volume's established and you then get low volume below. That gives you an entry there. After that though, this next phase of the move becomes quite a tough one. Whoops. Quite a tough one to actually then stay in. If you're then trying to get yourself in. If you're already in, not so tough. It's easier then to try and hold on. Once we then start to grind, this is where you can almost deal with these trades in looking actually at potential turnarounds. The one thing I caveat that with is don't go rushing into looking for a turnaround. What you want to be looking for is something like break of these highs, and where you get little surges on these grinding moves is breaks of previous highs. So break of this high, little surge. Break of this high, little surge higher. Whoops. Break of this high, little surge higher. So you get these mini bouts of pace, and you can deal with these by playing those. To deal with that, what you have to do is accept that this isn't necessarily going to be an explosive move that keeps putting you further and further on the side. You take the break of each little high and you go, right, break, get out, break, get out. If you're playing breakouts on these grinding moves, it becomes very difficult to stay in. And that's the nature of a grinding move. Another example here, this is the Bund rather than the DAX. Again, similar type move. You get this impulse to start with, but drift higher. So how do you play these? Well, one way to do it is once you've got these little surges up, that's what gives you a point of reference. And it's those little points of reference. The pullback there, and this is where patience really comes in. This is a 5-minute chart, and it sits for a full 45 minutes sideways. This is where you have to say to yourself, right, this is a grinding trend day. You've established that by this point because you generally draw a reasonably clear trend. Grinding trend, pull back to previous high, get in, stop below that high, wait for the trend to resume. The difficulty as well then comes in, where do you get out? So you've got to be looking for old reference points to the upside. Now the other thing to be looking for on these grinding trends is the move back through a consolidation. So unlike this high and this high, once you get above them, this high then retests and starts to range sideways. So now we've got a different pattern. As the pattern changes, you break trend and we reverse back down. VWAP is often a good target, and I'll show you today how this worked out rather nicely in the DAX. So that's one of the two ways to deal with these grinding trends. You either take each break and try and play on each break up, maintaining the mentality that this is going to be a small move. So each break up you take break out, or you look at it from a pullback point of view and you buy the pullbacks. Buying the pullback is a trade that requires a lot more patience, but once you then get the break, this enables you to stay in it. So as you get a break out of this small range, you get the pullback. If you played the breakout trade there, you're then getting stuck on the pullback. So it's all about establishing quickly what type of day we're in. Soon as you start seeing this pattern of tight candles but with a steady uptrend on them, then you can start looking at that and saying to yourself, okay, this is a grinding trend day, therefore I'm going to buy any dips back and then try and hold on to the next leg of the move after the dip back. Always aware that at some point you do quite often get a reversal as well. So I move back down once you set up some kind of range that fails to keep on going. Further example, and this is a particularly tough one on how you actually get in. With this one, again, you get this grind and move higher. Yes, there's an opportunity to get in from the beginning of the move, but once it then starts to grind, you got to think about what people's psychology is, people's mentality in this move. Anyone in here is just constantly trying to buy either towards the top or buy any small pullback to keep themselves in the trade. Only once you actually get a high that breaks with pace and then comes back to that high, so where the breakout point, that is what gives you your entry. So this is actually, to me, a day that you don't really have much of a play on this until quite a long way up the move. Rather than saying to yourself, oh, well, I could have been in down here for the break. You've got to ask yourself, even if you were, would you be able to sit through this chop, 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 chop higher? This is where the patience comes in to sit through this. If you play in the break as well, you get the break of the little range, shoots higher, and this aggressive impulse move, once again, is your reason then to start coming out of the trade. With it being a grinding trend, start coming out, but you can then hold something. This creates low volume and then allows you to play on to the next move. Once again though, with these grinding trends, you often get the situation where you then make a high, pull back, and this pullback, unlike this one, doesn't continue higher. Only when it breaks the bottom of the pullback can you then start thinking there's a short on. That gives you your first sense of a short. Next up, you're then looking for any pullback to try and get in on. So this again is your sort of passive entry. And then a break of that first impulse is where you then get the fast move down, as everyone who's been long through this then stops out. This then turns once again into a secondary grind higher, and you then get another grind on for the rest of the day. So the day maintains a bullish outlook, but the grind is what gets it up, and it is open to these sudden whips back. Okay, so we're going to have a look at what we currently got. Now I put this chart up at around about 9:30 this morning. Reason for doing that was to try and point out that you can pick these days. You can say, right, we're in a grinding trend day, and very quickly, got a lot of similarity to what we'd seen above. Day starts, dips down, and then you get surge, low volume. So there's your first in, if you want an in on this. Pull back to low volume. Now you look at the next move. Each break of a high, little surge. So you have two ways of doing it. You recognize the first impulse move here. That's giving you the clue that, and it's quite a predictable one because it was a break above the previous day's high out of this range. Once it surges, that's where you can say, right, now I've got a continuation trade on. You don't know at this point here that this is a grinding trend or a fast move. But as it then starts to slowly grind, you say, okay, it's a grinding trend. I now need to maintain some patience on this. I need to keep my stop. I need to hold on and wait for the move to progress. Target-wise, at least new high. And because it's a grinding trend, that may well give you a reason to then get out. As it pops the high, you go, okay, fine, I'll get out of it here. Or at least cover some and then wait for the next leg of the continuation. Now, next part of the trade is possibility of a reversal and always being ready and aware of that. This is what we then got. So this is the move on a 1 minute chart. Here comes the morning surge, and so the actual real spike up was still once you got over the high. So there was the main impulse of the move, and that's where the low volume buy comes in. Very quickly you realise that this is a grinding trend move. You could potentially have had an early in on this. Once the cash comes in, you get this fast move up, consolidates, and then starts again. You could be looking to try and buy the break of this move anyway, so you may well have been in on the break. Pullback holds to the low volume, and then you start this drift higher. Very common, you can get a nice, shallow trend line. And once you've got that, this is where we then bring back an old strategy that I'm sure many of you like, is the delta reversal trade. As soon as you get this spike in delta, which does coincide with the highs, this isn't a perfect delta reversal trade, but you get spike in delta, new high, we then consolidate, and you get this little basing here around about the 13, 14 area. That's your point, that on a break of that, also the break of trend, that gives you a short. You don't get much for this, unfortunately, so it's going to be a difficult one to stay in. But the key thing here is as we go back up, delta continues to fall. You then get another consolidation higher, so this is an attempt to keep the move going. Once it gets back below 14s again, then you get the next leg down. Target-wise, as we mentioned on that previous grinding trend, VWAP becomes a good target here for a small reaction and then a bounce back up into, and even you could well be looking to play this back through the range to the upside. So that's what you got to be thinking about with these grinding trends. What I'd also be looking at is what the profile's shaping up like. Now, if you go and look at the DAX, Euro stocks, profile-wise, this is looking very much a P-shaped day. So what this is showing is that people have been caught out. The shorts got out, which caused the fast move up. We're now consolidating. So this now looks like a reasonably slow continuation of move. Yes, we may get a new high, but I wouldn't be looking at this to then trend on too much further. So if we are buying VWAP, 14s is going to be key as to whether this can actually keep on going, and then you're looking for a new high and very little more. If this continues to keep pushing volume value higher, and you would have seen that by now, we'd then be looking at this and thinking this is a grinding trend and a trend for the rest of the day. But the fact that we have now had this pullback suggests this is more P-shape. You look where the pullback drops to, not only is it VWAP, it's the low volume. Very, very typical on a P-shaped day. That low volume holds the grind higher. Okay, so that's grinding trends. So a couple of things to remember with those. Establish it quickly. You can play breakouts, but if you do, look for minimal targets and be ready to get out of them quick. The way to get in a trade and stay in is to be looking for a pullback, let it settle, generally on a previous high on the move up, and then you've got to exercise patience and wait for it then to progress. Take out the high. Once it's taken the high out, that's where you can start looking at that potentially then to become the next level of support and it keep on going. And the trending, sort of proper trend grinding trend days, if you get what I mean by that, are ones where each high it will come back and it will hold, break again, hold, break again, hold.
Okay, so the question is support to resistance. Now, you all know what this is. You've probably seen this pattern play out a number of times, and you've probably always wondered, what is, why does it sometimes work? Why does it sometimes not work? Okay, in essence, what we're looking at is where a market creates a support area. In other words, it acts as a very significant support zone for the market. That then turns. In other words, the market holds above it, holds above it, holds above it. Eventually it breaks, and then it turns the support into new resistance, and then the market starts to use it as resistance. Okay, we call this support to resistance. Now, you would have seen this pattern play out a lot. And for the sake of avoiding, the cliche of, it's simple, you just sell it there and buy it there, I'm going to teach you rather how to identify when something is traditional, when something really is actual support and should become resistance. That way you're learning something from this rather than me just drawing silly graphics and hoping you're going to learn something. So the important question to ask is, what is support and resistance? Okay, and this is where most people go wrong. They don't understand what support and resistance is. Okay, support is not a line. Resistance is not a line. It's not just some line you put at a price and there's support there. Okay, support is where buyers, okay, listen carefully. So support is where buyers interact to hold the market. In other words, they are buying at a price point. Right? They're interacting, whether it's aggressive sellers, whether it's sellers that take profit the minute it gets to them, whether it's initiation. The point is that buyers interact at that price a number of times, multiple times, not once, not twice, multiple times. Okay? The more interaction, it's the rule of thumb, the more interaction you get at a support level, okay, the more important it becomes. Right? Why? Because of the psychology of once we break back down below that area. Now, note, it's not a line. Support and resistance is not a line. It's an interaction. Okay, it's buyers interacting at the support, sellers interacting at the resistance. Okay, now note, with this strategy, it always gets tested. Now, it's once we break down and that support is now gone, it always gets tested. And this is the real key. So a lot of the time what happens is we panic in and we start to sell too aggressively in fear of missing the break. But the market always comes back. It always wants to test whether or not those sellers are now engaging where those buyers were previously engaging. And that's the real key, guys. If you want to become successful at this, you've got to be patient enough to let the market come back to you. Now, this is the most important part. The process, the auction process that takes place on that retest is vital. Remember what I said, support and resistance is not a line, it's an interaction. Okay, so we see a specific type of interaction at the support. Once we retest, we want to see only one kind of interaction. Okay, we call this a key auction reversal. Okay, and it's one of the 10 strategies dealt with in the footprint course, and I'm going to show you what it looks like right now. Okay, so let's get a chart up and let me show you what this looks like on the charts. Okay, so we're going back to the 5th of September in the WTI oil. Okay, so this is the oil market. You can see this is a 30-minute chart. All right, now to understand the support, we've got to go back and have a look at the 30th, the 31st, and the 4th of September. Now, if you're trading the WTI oil, right, I know a lot of the traders at Axia, including myself, we're all trading and playing for the breakdown below this 69.53 to 69.64, and that's why you can see these 3 brown lines. I'm going to extend that for you. Okay, so you can see a number of times, once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10, 11, 12. So 12 attempts at this area from 69.53 to 69.64. 12 attempts to try and break lower. The market then springboarded and we aggressively rallied again. Okay, so we can see this market has a significant area of support here. Not because I say so, not because of the lines, but because of the interaction that took place. Sometimes there was no real buying, but sellers couldn't initiate below this. Sometimes there was some very aggressive buying. Sometimes there was, very aggressive reversals. Sometimes there was nothing going on. The point is, buyers continue to interact in that area, continue to absorb in that area, continue to hold the market in that area. Now, the market finally breaks down. Now, the first key thing to understand is that when we do break below that area, we do need to see volatility, i.e. note the range expansion. So I'm going to open this up a little bit. Okay, so notice the candle, nice full-bodied candle. So there's the interaction. That's telling us there was an interaction finally below that area. Okay, a couple of longs being stopped out, but in essence it's telling us that support has now been broken. Okay, we can confirm that obviously with the volume. Okay, notice nothing going on in terms of volume, low volume, and suddenly a spike up to 23,000 contracts. All right, we then get the continuation. So the breakouts occurred. Now, this is where a lot of traders go wrong, is they try and sell here too aggressively. Don't. Let the market come back to you. So the market comes back. First time, it tests. auctions off. Okay, nice strong auction reversal there. Note as we go in, we come out. So nice V-shaped type reversal. Right, market comes in a second time. Again, a little bit more absorption. Right, this was obviously at 2 o'clock in the evening, so unlikely to see very strong auctioning there. Why? Because no one's trading. And then the real key one, and this is what sort of stood apart. Okay, we had a little bit of a rally again the next day. We rallied from 68.75 back into that area of support previously, and notice the auction reversal. Okay, very, very aggressively. And that's the real key, guys. That's telling us the sellers were engaging in that area, not once, not twice, but 3 times. Okay, so support has now turned to resistance. Let me show you what this looks like on a footprint chart. Okay, so this is obviously, like I said, this is the 5th of September, and we can see this is the breakout. Okay, so on the footprint, we can see the breakout. Note, and this is a term you'll learn in the footprint course, note the imbalance. Okay, so no buyer, just selling. Okay, market auctions lower, and a couple of hours later, note what happens. Okay, we come back to these 57s. I just want to get it to there. We come back to the 57s, 46 lots trades, and the market auctions off straight away. Okay, and I'm going to take you further on in the day and show you the key auction reversal. Now, this is the first strategy dealt with in the footprint course. I did show you guys one of these a week or 2 ago, but this is what it looks like. Okay, so the market comes up here. Notice the volume. Very aggressive volume, large absorption taking place by the sellers. The sellers finally, you know, they just take everything the buyers are willing to give, and once that buying stops, right, we get not just an outside 5-minute candle. Okay, each one of these is obviously a 5-minute rotation. We don't just get an outside 5-minute rotation. We then get, notice the delta. We then get the interaction. So sellers say, "I'll take everything you can give to me," i.e., absorption at the top, and once the buyers stop, the sellers say, "Okay, now I'm going to actually start selling more because I need to get this order done." And that's the key. That's the key auction reversal there. We can see the market drifted off all the way. I mean, we had a good, it was effectively the low to high of the range. We went from 69.57 all the way down to 68.70. So a good 80-90 tick reversal in a space of 20 minutes. Okay, and you can see the volume pick up, almost 50,000 contracts in 15 minutes. And the delta went from positive 1,200 to negative 6. Okay, now that's our key auction reversal right there, guys. And it tells us now this area of 69.57 to 69.64 has now turned into resistance. That is the key for oil. You need to keep an eye on that area. If we ever do get back up there, it's likely to keep offering resistance until it fails. All right, now the next part of the stream I want to turn to is the breakout. Okay, because I said to you had some really good trading going on. On the 8th of September. So we know we've got that key auction reversal, right? One of the things we deal with in terms of, strategies is not always about just executing the strategy. It's also about taking the information of what the strategy means. In other words, a key auction reversal doesn't just tell us that, the market's found some very aggressive sellers. It actually tells us that the market is likely to continue with the trend. And that's what we got on Thursday, the 6th of September. And this is this move here. Okay, so what I'm going to show you is what this looks like. In essence, what we were looking for was we had a breakdown of this. I don't even want to call it a trend line. I mean, I can put it in for you guys. But in essence, we had a little bit of a break of this, higher-low formation that was occurring. And we did get the break below the previous week's low. And that really ignited, we had 48 or 55,000 contracts traded in 5 minutes now. In half an hour. Now, if you don't think that's a lot, guys, it's a significant amount. It's a complete standout amount of volume, and that was the move that we were all playing for yesterday. It's not just necessarily the break below the trend line, but it's a continuation after we had that key auction reversal. Okay, and we can see we've got a nice move from 68.50 all the way down to 67, a good 150 tick move to the downside. Okay, now, the important thing is not just to talk about it, all right? You've got to be aware of it. So a strategy is about, understanding the information, but then the real professional traders, the real solid traders, the real, what I like to call badass traders are the ones that ultimately have the timing perfected. Okay, and this is where the footprint chart is so extremely useful because it helps you with that timing. It kind of, gives you a hint as to when you should be ultimately engaging with the market. Okay, so what I want to do is I just want to get this back to the breakout and we can take a look at that. Okay. So what we've got now, this is the 6th of September. It's around about 4 o'clock in the afternoon. It happened just after the EIA inventories data. And the key is just before we broke the daily low. Okay, and we discussed this again. This is in the footprint course. Every good breakout strategy always gives a signal. Okay, there's always a signal in the footprint that something is coming, an impending order is coming. And I'm going to show you what that looks like. Okay, so you can see nothing really going on in terms of volume. The data came out, we kind of went bid up, quite a bit of aggressive, move up, a little bit of volatility more than anything. Okay, no real movement. But then all of a sudden, okay, if you look, all of a sudden, going into the data, we were doing about 3,000 volume per 5-minute rotation. All of a sudden, the market comes down to the low of the day, and we get, a good 5,000 contracts traded between 47s and 51s. Okay, so the market came down. There was a little bit of absorption on the low. Okay, so someone was just absorbing the low of the day ultimately, but doing it in size. Now, it's fine to absorb the low of the day in size, but when it's done in size and the market still can't go bid, psychologically that's telling you what? It's telling you that, yes, there is a big buyer because he's taken 5,000 contracts, but there's an even bigger seller if it goes through him. Okay, think about that logic for a minute. Really big buyer of the low of the day, but the seller is selling even more than a really big buyer. Okay, and that's the real clue. When you have that sort of interaction taking place at key pinch points, that's telling you about an impending move, which is that these sellers have got even more ammunition to come. And that's what happened. Once we took those 48s, okay, you can see, notice the imbalance, 0.25, 0.6. Okay, so suddenly there was no more buying and the stops begun. Okay, so we got a little bit of a flush lower first, and then the real move came. Okay, we dropped from 68.40 all the way down to 67.90 in 5 minutes. A good 50-tick move. Okay, through the previous week's low, obviously, as I mentioned. It then continued. We went from 68
Bank of England's 10-day
down to 67.70, and we continued lower and lower and lower. Okay, a good 125-tick move in a space of 20 minutes. Okay, that was the breakout we were looking for with the clue. Now, if you like breakouts, you have to be using footprints, okay? They're going to give you so many subtle clues as to when that breakout is about to occur. Now, what I want to talk about, and it's the last strategy I spoke about, is what we call an elephant. Again, the strategy is dealt with in the footprint course. But the low of the day, in essence, was an elephant. Now, if you're watching the CL ladder, which is the WTI oil,
the central banks cannot
I actually
anticipate
remarked
shocks,
to the guy
and
in
the
the
Bank of
office,
England
look at the
should return
400 lot
inflation to
orders
the
on the
target
bid in
on
the oil.
the
There was
2
one
to
at
3 year
67 double O
horizon.
and there's one at 66.95. Okay, market came down, took his 400 lots, but he reloaded for another 330. Okay, we call this an elephant. We call this an iceberg order. We call this, effectively a buy order, which is where the market comes down, it trades the size, but there's more sitting behind it, an elephant. Once the market realized that elephant was there, we obviously had the sellers back off. Okay, the sellers gave up completely, and the market suddenly did an outside candle off the low. Okay, now when you get an outside candle off any extreme point, that's telling you be cautious. Okay, we got to move from 67 to 67.25 off of that elephant, and the market then continued. All right, we then had a shallow pullback, and the market rallied an entire $1. So 100 ticks, guys, the market rallied off of an elephant in the market. Now, what I'm not saying is whenever you see an elephant, you're going to get a 100 tick move. It's not that straightforward, okay? This was a very much an outlier. It's a pattern I've added to the collection, but it's very rare to see that sort of a reaction. What I am saying is that the market had driven from the top of the day to the bottom almost 260 prices. Right, which is very extreme. So the market was looking for a reason to bounce. If you were looking for a reason to be long, that was the only time to be long, was when the market told you that it was time to be long. There's a real key lesson there, guys, is that a lot of the time we would have just been trying to catch a falling knife and trying to buy it in random areas, random price levels. Rather, let the market, let the buying interaction tell you that they're buying it, and then buy it. Right, that way, you know where your stop is. Okay, your stop sits below this buyer now. Right? Equally, you know that you're not just taking unnecessary risk. You're allowing the market to tell you when to access it, in essence. And that's what makes the footprint tool powerful. It tells you when to buy and when to sell. Okay, it tells you this is the right time, this is the right time. That way you're not taking excessive risk. That way you're not sitting in trades for 6 hours hoping it'll
And the
go
Bank
where
of
it needs
England's
to.
10 Robo says
Okay,
the Bank
the
of
real
England
key to
faces a
trading
very
and being
fine
successful in
balance
futures
when setting
is being
policy
able
in
to
the
leverage,
future.
and the only way you can leverage trades is by minimizing your risk. And the only way you minimize your risk is by buying and selling at the right times. Okay, so that is our key takeaway. If you do like any of these strategies, whether it's the key auction reversal, whether it's the breakout play with that signal I just showed you, whether it's the elephant, every one of the 10 strategies in the footprint course is covered in great detail. Okay, I'm just going to go back to that grid. We cover every one of these 10 strategies with video analysis, with, and 5 or 6 different charting examples. It gets explained in terms of why it works, how it works, where the risk is, where you're targeting. Every single one of these is explained in great depth in the footprint course. Okay, if you like the footprint tool, this is a massive investment, in your trading education. And again, like I said, this is my #1 tool. It's helped me as a trader to become a lot more successful at the timing of my execution, but also confident in utilizing size at the right time. This week we're going to talk about, the last 2-3 weeks, if you've been following, we've kind of been sort of following on week by week, and I've kind of been bringing up concepts from a previous week into the current week. And the reason behind it, the logic, is that we're seeing these principles play out. And it's important that, we keep building on these foundations, because, very, very, a lot of these principles we're discussing are very, very important in terms of, developing your trading intuition. And
Bank of England's 10 Rero
Okay,
says that
so
workers are in a difficult
we're going to continue
situation
on this
and
theme of
real
auction
incomes will
imbalances. Now,
suffer.
I've had 2 or 3 emails come to me saying, are you still using the footprint charts? And the simple answer to that is, of course I'm using the footprint charts, but what I'm trying to do is I'm trying to get away from seeing an actual footprint chart and rather interpret the actual footprint concepts. Okay, it's crucial that one of the things that I really kind of find that's quite common amongst young traders is they always want an exact understanding. Okay, so they want to see something exact on a footprint, and then they see it as, for example, an auction imbalance. Right? Trading is not precise, it's not exact. It's anything but precise and exact. If anything, it's about making sure you understand the principle, okay, the core principle, and then applying yourself accordingly. So that's what I'm going to do again today. We're gonna actually bring in the market profile today. I'm going to show you an auction imbalance that we saw, that I showed you guys 2 weeks ago in the oil market, in the German Bund market, and I'm going to show it to you again, show you what the implications were, and then I'm going to show you one of those exact same plays, okay, the exact same strategy approach that we saw in the oil this week, okay, same auction imbalance, same opportunity, same methodology in order to take advantage of it. Okay, and then we're going to talk again about this concept of narratives. Okay, I want to keep sort of pushing on this idea of narratives, because there is something that's developing within the financial markets that it's crucial you understand. Okay, so let's get into it, and let's see where we get to. So we spoke about the low volume areas. Okay, we spoke about what this low volume area means. And how we ultimately execute it. Now, for those of you that missed that stream, it's very simple. A low volume area is an untraded area over a certain time. Okay, it's where there's very minimal amount of trade facilitated. Okay, now when we see these low volume areas, we have to be particularly aware of what they mean. Okay, in a simple sense. Okay, so on a principle-based sense, so long as a low volume area holds, there is effectively an excess positioning in the market. In other words, there's an imbalance in the market. Okay, what it's telling us is that the sellers got very aggressive
is to
through a
retire
certain
in
price
January,
point. In this
so his
instance, it
successor has
happens to
begun.
be
So again, Kansas City
this
Fed
price
statement
point
there.
over here.
Feds George to retire in January.
Sellers got very aggressive. We can see quite a lot of volume transacted just ahead of the break, and then no volume transacting at all. Okay, so in other words, whether that was some longs liquidating, and that's why price moved and repriced itself very quickly, or whether that was shorts very aggressively hitting into bids, okay, one and the same, they say the same thing, which is that we've now got some fresh short positioning in the market. Okay, and what we typically see with these low volume areas is so long as they hold, okay, so long as they hold, they tell us about the short-term positioning in the market and the short-term direction of the market. Okay, in other words, so long as we hold on to this low volume area over here, okay, the market should continue to price lower. Now, this has happened on Thursday the 11th of June. What happened on Friday? Okay, we can see the market opened, auctioned, took out Thursday's lows, right? Came back, where did it test? 37s, which was the top of the low volume area. Okay, so market retested, and what do we see straight away off of that? Notice the size of these TPOs. Okay, notice the range of volatility there. Right, you should all be seeing that that is the largest 30-minute range that we've had all day. Okay, and where did it come? It came on a retest to that low volume area. Okay, and that's the crucial. You know, a lot of people say to me, "Oh, yeah, but that's in hindsight," right? What I want to stress, and this is so crucial, is as a trader, okay, it's not just simply a case of, you know, we sell the market at random levels. No, it doesn't work like that, right? We sell the market, and then when we get this additional piece of information, i.e. that we get a very swift rejection in the C print, that confirms our trade is good. That confirms that our understanding of a low volume area is now justifiable. Okay, that's what we call price action. Right, the market is telling us that the very sellers that were aggressive leaving this low volume area are equally aggressive on that retest. Okay, and we can see a lot of people are saying, "Oh yeah, okay, but it's a small rotation." Oil dropped from 37 down to 35.5, 156. Okay, that's by no means a small rotation. Okay, so that's the low volume area. Now, I quickly want to bring up the German Bund so we can just talk about that, and I can show you what it looked like, how it played out, and just show you the similarities between the two. Okay, so this is the German Bunds, and that date type is let's get it there. Okay, so yeah, it was the day that it happened. I'm just going to outline it. It was this day here. Okay, the market auctioned very aggressively. We left a low volume area. So where this brown line is, okay, the market left a low volume area. Right? Next day, it extended, came all the way back. Where did it retest? It retested the low volume area. Notice the large wick. Okay, by the way, this is a 2-hour chart. Okay, notice the very large wick. Market then extended lower. Okay, it stayed inside this range before then continuing lower. Okay, and that's what we're looking for in the oil now. Okay, we're looking for a little bit of sideways consolidation before we start to auction lower. Now, surprise, surprise, where did the market stop on Friday? Okay, right back at that low volume area. You should all be going, "Oh wow, actually, okay, we can very clearly see that this area is acting as a good form of resistance." Okay, and that's all resistance is. It's a point at which sellers are engaging in the market. They're holding a price point. Now, yeah, that's the exciting part. Okay, come Monday, right, this is obviously the stream was done over the weekend. Come Monday, what are we looking for in this German Bund? Right, if we start to hold price above that 175.58, you're very quickly going to see that Bund auction higher. Okay, you're going to see some form of a stop run. Okay, so anyone short is going to start to liquidate those positions. Right. So you can see how these low volume area plays give us really good, not just opportunities to trade, but they also give us very good understanding of the short-term direction of the market. Okay, so let's look at the oil now. Right. So what we can see, there's our pretty little red line. Okay, again 2-hour chart. We can see that low volume area holding quite nicely. Market auctioned lower. It's come back to retest. Okay, now what we're expecting on Monday, right, very early on, we're expecting oil
Just
to
as a heads
offer
up,
again
in
and
10
come
minutes
and
time,
test that
at
34.5.
12:15 p.m. Eastern time,
now
we
again,
are expecting
from
comments from
36.5
Fed's
to 34.5
Brainard.
is a 2-point range.
So Fed Governor
Right, that's a
Brainard
pretty decent
will
opportunity.
be making
What's it
remarks
gonna
at the
cost us in
Johns
terms of
Hopkins
risk?
University of Advanced
Okay, very simple.
International Studies
Our stop just simply
2022
goes above
commencement
the
ceremony
37s.
in Washington.
Okay,
It will be a
37,
text
call it
for Fed's
37.10.
Brainard, but no
You
Q&A.
don't need much more than that. You're taking a 60-tick stop for a 200-point target. Right, so hopefully you're all starting to see the power of this. It's not that this will work every single time. It might not. okay, it might only work 1 in 4 times, but guess what? You're getting 4-to-1 risk reward every time, which means you're breaking even, right? In order to determine how often this works, you've got to go do the homework. Okay, I've done the homework. I know what the numbers are. You need to go do that homework. Okay, go look into this. This is not just a profiling concept. It's a profiling concept. It's a footprint concept. Okay, anyone that's done the footprint course, you would have seen these imbalances, right? They occur all the time during the day, right? When those imbalances start to effectively get traded out, they offer very good positioning unwinds. Okay, we spoke a lot about that in the footprint course. Really nice strategy where you have these imbalances, they get created at the beginning of the day. All of a sudden, we see the markets reverse very aggressively, taking out those imbalances. Okay, now I just want to show you one of those imbalances because it happened in the gold this week. And if you go back and look on Thursday, and then you go see the gold market, right? It was this day, yeah. Okay, on the cash open, what had happened was all morning, okay, or sort of the previous day, all the previous day we had been just drifting higher, drifting higher, drifting higher. And the very next session, we just got this wipeout trade. Okay, it was almost like all the positioning got too long the market, too aggressively. There was a whole bunch of, imbalances within the footprint, and all of a sudden, it got top heavy, and the market just washed everyone out. I mean, that was a decent $20 move from high to low, and it happened very swiftly. Okay, and that was all those imbalances, i.e. positioning. That's all an imbalance is. It's showing us an aggressive nature of positioning in the market. Okay, now let's move on with the stream. So hopefully you understand those auction imbalances and the opportunity it presents for you in the week ahead. Okay, now we spoke about what come out, okay, because the market wouldn't move that aggressive on that much volume if there wasn't any new information, but there was new information. Okay, so we go look at the information, and the information was dovish, okay, supportive of risk. Equities finished pretty much flat from the event. From the time the event came out over there to there, we pretty much finished down, call it 15, 20 handles. Okay, what did the bonds do? Bonds were very aggressively bid. Now this is where it's confusing, because if bonds were up 1 point, okay, you look at the US 10-year, they're up 1 point, and the equities are marginally down, that's suggesting to us that there was a dovish tilt to it, i.e. bonds wouldn't rally a point unless there was something aggressive set, which was that they're going to buy more bonds than expected. Okay, so in terms of a narrative, we were correct. The bonds told us we were correct, right? But the equity started to offer. And that's a real clue. And this is where understanding, subtleties in the market is so important, okay? The fact that the bonds responded the way they did, i.e. dovishly, but the equities were actually weak on a dovish announcement, tells you a lot about the price action of the market. It tells you that there was someone that wanted to take some profit on this announcement, okay? And take profit, why? Well, because markets have rallied 40% in the last 2 months. Okay. Now this is where it becomes tricky, and make no mistake, okay, I never like to pretend that this was easy, okay, because for me, coming into into Thursday, my plan was very simple. I wanted to get myself short at some point, okay, I wanted to be short the market on the signaling that was coming from the market. However, the problem was, by the time, pretty much most traders got to the desk, we were trading somewhere around here. Okay, so this is all the Asian session, and we can see since the close we've dropped from 3170s all the way down to almost 3100. So we're down minus, call it 75 handles on the day. Percentage terms, 2.5%.
So in 5 minutes time now
So
at
think about this.
12:15
Put yourself,
p.m.
and this
Eastern
is
time,
why
we are expecting
it's
comments
so
from
important
Fed's
to always
Brainard.
play these things back,
Brainard
because when I
making
came in
remarks
in the
at the
morning,
John
or actually when I
Hopkins
did my
University
debriefing on Thursday,
School
I
of
was
Advanced
particularly,
International
for lack
Studies,
of a better
the
word, pissed off.
2022
I was frustrated
commencement
because I was kind
ceremony
of like,
in
well, why
Washington.
didn't I just sell
There is a
it?
text expected for Fed's Brainard
This
in
is where
just
you've
under
got to go
5
and
minutes
interpret
time,
your
but
psychology,
no
because
Q&A expected.
if I look back on the day, to sell a market that's already down 2.5%, okay, at that point, On the cash open, Europe was down 3%. DAX stocks, IBEX, FTSE MIB, all of them are down 3% at cash open on Thursday. How do you sell a market that's down 3% already? Okay. Now, that's the first part, but the second part is the cash open of the US session. Okay, we can see that the cash session for almost an hour and a half, 2 hours, the market just rotated in a 20 handle range. Now at this point, if you've tried to be short, okay, you short with your psychology saying, well, we're already down 2.5 to 3% now, and I'm short in a very dangerous zone, which is what this blue line is, 3100. Okay, what's the probability that we're going to continue on this day? Well, we did continue. Okay, we dropped another 100 handles, another 3 and a bit % move. Okay, so
expecting the US to be selling $48 billion worth of 5-year notes. Previous bid to cover ratio 2 to 41. Previous high yield 2.785%. $48 billion worth of 5-year notes. Previous bid to cover ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. Ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. Ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. Ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. Ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. Ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. Ratio 2 to 41. Previous high yield 2.785%. Turkey does not see the NATO summit in Madrid as an expansion deadline. And 1 p.m. Eastern Time, we are expecting the US to be selling $48 billion worth of 5-year notes. Previous bid to cover ratio 2 to 41. Previous high yield 2.785%. We will shortly be receiving the US 5-year note. Treasury when issued 5-year yield at 2.732% before the $48 billion auction. 2 to 44, 2 to 44 compared to the previous of 2 to 41. High yield at 2.736%, 2.736% compared to the previous of 2.785%. So just to recap, the US sells $48 billion worth of 5-year notes at the high yield of 2.736% and holds 17.44% of bids at high. US 5-year notes bid to cover ratio 2 to 44, non-comp bids at $108 million. We are also seeing that US Treasury yields rise to 2.745% after auction of 5-year notes. Also seeing primary dealers taking 17.04% of US 5-year note sale, direct at 20.03% and indirect at 62.93%.
All right, guys, I just want to give a little shout out to my friend
Primary dealers
Patrick.
accepted bids at 11.38%, amount of tendered in US 5-year note sale. Directs took
Yeah, I'm saying hello.
82.01% of the bid amount, and indirects took 88.9%.
You okay? Yeah, I can hear you. Right, I'm
Seeing from the Finance Ministry spokesperson speaking right now, saying UK Finance Minister will set out more details on Thursday of government response to help with the cost of living pressures. So we did just see earlier from an ITV deputy political editor citing parliamentary whips, saying that UK Finance Ministry is to make a statement to Parliament on Thursday. And we are just seeing now that UK Finance Minister is saying they will set out more details on Thursday of government response to help with the cost of living pressures.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci and market profile levels by signing up at tothetick.com.
Green light for gas shipments to Gazprom Germany from Yamal Liquid Natural Gas for 90 days. 94 counterparties take $1.996 trillion at the Fed reverse repo operation. Also seeing from TASS News, Russia is also allowing 90-day Yamal liquid natural gas sales to Gazprom Singapore.
Just reminding you, in 10 minutes time at 2 p.m. Eastern time, we do have the FOMC meeting minutes.
Okay, we're just coming up to the FOMC minutes. To be honest, I'm gonna sack it off. I don't see very many good setups. We're just stuck in this balance. Unless something really, really important comes out, I'm not interested in trading this at the moment. It's just not setting up properly. I think there's a better setup in bonds. If you're trading bonds, I think the treasuries look like there's a good potential for a short through the lows. But yeah, I'm not interested in trading the equities at this point. So yeah, I think that's it for me now. So I will leave Squawk running, but not interested in trading the not interested in trading the FMC given the way that we've set up here. It's just I don't see any risk reward for big trades. We're 20-30 ticks away from the highs, and we're 20-30 ticks away from the lows. We're bang in the middle of balance. Maybe for a quick scalp if you're quick, but then unless something really big comes out, I won't be trading equities.
In 5 minutes' time at 2 p.m. Eastern Time, we do have the FOMC meeting minutes from May 3rd and May 4th. So just under a minute to go now until we receive the FOMC meeting minutes for the May 3rd, May 4th meeting. So the Fed has just released the FOMC meeting minutes. All participants said that the first quarter 2022 GDP decline contained little signal about subsequent growth, and they expected real GDP would grow solidly in the second quarter and be near or above trend for the whole year. All participants supported plans to reduce the size of the Fed's balance sheet, and numbers said after runoff was well underway, it would be appropriate to consider sales of mortgage-backed securities. This is coming from, again, the FOMC meeting minutes. Participants emphasized that they were highly attentive to inflation risks and agreed those risks were skewed to the upside, and many participants judged fast removal of policy accommodation would leave the Fed well positioned to assess later this year what further adjustments were needed. Fed participants saw the Ukraine conflict and China COVID lockdowns posing heightened risks, with particular challenges to restoring price stability while maintaining a strong job market. Participants agreed the Fed should expeditiously move monetary policy towards a more neutral stance, and that restrictive stance on policy may well become appropriate. All Fed participants agreed the US economy was very strong and the labor market was extremely tight and inflation was very high. All participants at the Federal Reserve's May policy meeting agreed a half percentage point interest rate hike was appropriate. Most judged such hike appropriate at the next couple of meetings, and Fed officials noted restrictive policy may become appropriate. So this is all coming from the Fed release of the FOMC meeting minutes from the May 3rd, May 4th meeting. Taking a look at the market reactions here, we are seeing some slight downside movement on the Dixie, some strengthening in the S&P 500. Taking a look from the CBO now, the CBO forecasts US consumer price index inflation at 6.1% for 2022, 3.1% for 2023, and 2.4% for 2024. CBO also forecasts the US fiscal year 2023 deficit of $984 billion, cumulative fiscal year of 2023-2032 deficit of $15.74 trillion. US Congressional Budget Office estimates the FY 2022 federal budget deficit at 1.036 trillion based on the current law versus 2.775 trillion in the FY of 2021. CBO forecasts US real GDP at 3.1% for the calendar year of 2022 versus 5.5% for 2021. 2.2% for 2023 and 1.5% for 2024. Says that the FY 2022 US deficit estimate is $118 billion, less than the estimate made in July 2021. The CBO forecast the US consumer price index at 6.1% for 2022, 3.1% for 2023, and 2.4% for 2024. Says that the FY 2022 US deficit estimate is $118 billion less than the estimate made last year. Let's repeat headline there. Just a bit of a sort of market commentary here. The Treasury is now steady after a release of the FOMC meeting minutes. And just a reminder for you, the FOMC meeting minutes have been posted on the Financial Juice newsfeed if you do want to have a read.
Okay, so like I expected, nothing really happened. Nothing new from the FOMC minutes. And we just got a whip up and a whip down. I tried to trade, but I didn't really get anything on. So you just want to trade these sort of balance in these kind of scenarios. Anyway, I'm done for the day. Good luck with the rest of it. Catch up with you for the debrief. And see you all tomorrow. Bye-bye.